Hello, my name is Jerry D'Ambrosio, and I'd like to welcome you to this week's special presentation, Nail Turning Points with Pinpoint Accuracy. Candlestick charting has been around for hundreds of years. It was developed in the 18th century by a famous Japanese rice trader and introduced to the Western world by Steve Nissen in the book Japanese Candlestick Charting Techniques. Candlestick reversal patterns identify changes in investor sentiment. Single candlesticks convey valuable information about the changes in a market's supply and demand balance. It's really important to observe where the stock closes in relation to the open and where the stock closes in relation to the highs and the lows as well. And the size of the candlesticks are important as well. A succession of candlesticks taken together is more pertinent as they form a pattern. In any candlestick presentation that we've ever delivered, we've always focused on the stock level. I'm going to change things up a little bit here tonight because the same analysis can be applied to the overall market. This is a graph of the VectorVest composite. We're looking at a market timing graph from the end of September of this year to pretty much current. The market had been in a downtrend for quite some time, pretty much the entire month of October. We see a big filled red candle on October 24th. That reinforced that we were in fact in a downtrend. But the following day, after the session, the VVC formed what's called a bullish harami candlestick reversal signal. This is a very reliable reversal pattern and an indication that the downtrend is weakening and a reversal may be imminent. Now it's a bullish formation, so what we need the market to do on the following day is go up. Well, you can see that the market didn't go up on the following day. It actually fell and fell for 2 straight days, and the close of October 29th was in fact a new lower close, also a new intraday low as well. That bullish harami pattern, which looked great as of the close of October 25th, did not confirm or was not confirmed by the overall market. It's very important that the market follows through and confirms that change in sentiment that occurred on that day, October 25th. So the market continues to move lower, and on October 30th, the VVC forms another bullish candlestick reversal signal. This one's called a bullish engulfing, another very reliable reversal pattern. The only difference here with this signal is that we did get follow-through or confirmation the following day. The market opened higher. In fact, the market gapped up on October 31st. It opened higher than the previous day's high. It also closed higher than the open, and in fact, the open was at the low of the session as well. So we did get bullish confirmation on the following day, and that is a day where you can take action. Now, the reversal didn't last as long as we would hope it would, right? So it went up for 1, 2, we got 3, 4, 5, about 6 days here of potential gains here in the stock market. On the 7th day, the VVC formed a bearish candlestick reversal signal called a bearish harami. This is an indication that the uptrend is weakening and a potential reversal is imminent. If we need the market to rise following a bullish reversal pattern, we need the market to fall following a bearish reversal pattern in order for this pattern to confirm. Now, I'm not saying I want the market to go down, but when we're looking at these and studying these patterns, it's very important that you follow the rules. And if you see a bearish reversal signal, like a bearish harami on the VectorVest composite, with confirmation the following day, and you could see we got confirmation on the following day, a gap down and a very bearish day, a lot of selling pressure on that day. So that gives us an opportunity to take gains off the table, or at the very least, tighten up our stop criteria. So what's the next step? Well, the first step, right, is to observe and recognize any bullish candlestick reversal signal when the market is in an extremely oversold situation, and we saw that signal on October 30th. The next step, of course, is to find stocks exhibiting similar patterns. Here we're looking at one of the top stocks in the S&P 500 on October 30th. This is PH, that also formed a bullish harami candlestick reversal signal. Same rules apply. If you're looking at an individual stock and you see a bullish candlestick reversal signal, You need the market to rise the following day before you take action. And it did. On October 31st, in the case of PH, the stock gapped up, opened higher than the previous day's high, closed higher than the open, a little bit off of the session high, but still nonetheless off of the low and higher than the open as well. So the bulls are back in the picture. The stock went up for 1, 2, 3, 4, 5, 6 days in a row. So a real nice opportunity for some gains here. Stock was at about 150 and change upon entry. It rose all the way to a little bit above 170. So you're saying, well, stock started to pull back a little bit. So yeah, that would have been an obvious opportunity for me to take gains off the table. But how would I have known to do that? Well, what we're looking at here is a bearish candlestick reversal pattern called a bearish descending hawk. This pattern points to the diminished enthusiasm on the part of the bulls and suggests that a trend reversal is likely. It's a bearish reversal pattern. So what do we know we want the market to do the following day? We want it to go down. If it goes down, that bearish pattern is confirmed. That is an opportunity to at the very least tighten up your stop criteria or take gains off the table and move on to the next trade. Here we're looking at GD, General Dynamics, another top VST stock in the S&P 500 that formed a bullish reversal pattern on October 30th, the same day that the VectorVest composite formed that bullish engulfing. This is called a one white soldier, a little different than a bullish engulfing. Here the stock opened higher than the previous day's close and closed higher than the previous day's open. Another very strong, reliable bullish reversal pattern. It's a bullish pattern, so what do we know about the market the next day? We want it to go up. The market did go up the next day, so the pattern is therefore confirmed. The stock went up for 1, 2, 3, 4, 5, about 6 days here, and we can clearly see the reversal, beginning of November. And that, in hindsight, looks to be a good opportunity to take gains off the table. But right at that swing high there, that is a bearish candlestick formation called a hanging man. It's another indication of a weakening uptrend. You're saying, well, how can this be bearish? The close of the session was practically near the high of the session, and that's true. But you can't ignore the long lower wick. In an uptrend, when you have sellers that are able to push the stock price down to that level, that says something. Even though they weren't able to sustain that down move, they were able to push the stock lower. Now, the buyers came in and rallied and closed the stock near the high of the session. But if you see ensuing weakness over the next day or the next 2 days, that is an indication to sell that long position. Take your gains off the table. Sentiment seems to have changed here. Here's TDS, another top VST stock in the S&P 500 that formed a bullish candlestick formation the same day that the market did. Here you have a case where the stock actually hit a new high and came back to retest this support level for the second time. As the stock settled into that support level, it formed a bullish reversal pattern, another one white soldier. We know in order for us to take action, the stock has to rise the next day, and you can see that it did. Now, the stock fell the following day, and that might happen, right? You might enter into a trade off of a retracement, off of a support retracement or a bullish candlestick formation, and the stock doesn't go up immediately after you purchase it. Well, the stock fell the next day, but it never went below the pattern low, nor did it break through support. So no need to panic sell there. You have a very solid support level here that serves as your floor. If the stock price goes the other way and breaks through that floor, that is an opportunity to cut your losses. You could see the following day the stock opened higher, and boy, what a day TDS had on this day. Almost a 10% move. So you're going to look to take some gains off the table maybe. The following day, we saw a little bit of weakness. The stock actually formed a bearish harami. We saw this on the market timing graph just a few slides back, but now we're looking at the stock level. So this is called a bearish harami. This is a bearish reversal signal. In order for us to take gains off the table, what would the stock need to have done the following day? Needed to have gone down. Well, the stock never went down. The stock actually went up the next day, so no need to exit the position just yet. You did not get confirmation off of that bearish pattern, therefore no need to exit the trade. Let the trade run. What are we starting to see here though? Look at those long upper wicks. So those long upper wicks tell a very interesting story. Buyers on each of those 6 days were able to, at some point during those sessions, drive the stock price to those highs. And on the first 3 days, buyers were able to finish strong and close the stock above the open of those days, right? So these 3 are unfilled candles, meaning the stock opened here and closed up at the top here. Stock opened here, closed up at the top here. Stock opened here and closed up at the top here. What happened on the 3 following days? The buyers were still able to push the stock higher. They weren't giving up just yet. But what's the difference? The difference is you have 3 filled candles, which means that the sellers were able to finish strong and close the stock near the lows of those sessions. That right there, folks, is a really nice opportunity to take your gains off the table and move on. Remember where you got in. You got in all the way down here at about $31, and we're talking about a 5-point increase in only about a week or so. Here's CNC, another top VST stock. You're familiar with this stock. Right here, a little bit before the VVC formed that bullish engulfing pattern, CNC formed a bullish harami pattern, right? Stock opened higher than the previous day's close, but closed lower than the previous day's open, forming that harami pattern. What do we need the stock to do the following day in order for us to take action? We need it to go up. Well, the stock didn't go up. It continued to fall. Therefore, no action is taken. We did not get confirmation. You don't jump into the trade just because you see the pattern forming maybe by the end of a session without waiting for confirmation. The stock continued to fall for the next couple of days, hitting lower closing prices and lower lows as well. But on the same day that the VVC formed that bullish engulfing, CNC formed a harami. So we actually had 2 haramis in a row. The only difference is the first one did not confirm, but the second one did. Price gapped open on the following day, continued to move higher, closed higher than the open, giving us confirmation, giving us an opportunity to take this trade. This is one also that didn't go our way right away, right? So the stock went sideways for about 4 days in a row, never fell below the low of the pattern. So 1 down day or really 2 down days here. No need to panic sell. Stock opened higher the following day and another great day there. Clearly we can see at the lower high that CNC formed, lower high meaning lower than this previous high, lower than this previous high, that would have been a good opportunity to take gains off the table. That, in fact, folks, is a bearish candlestick pattern called a hanging man. We saw this earlier. What did the market do the following day? It confirmed that hanging man, giving us an opportunity to take our gains off the table. Here's INTU, Intuit, another top VST stock. Similar situation. Retest of the recent low here back at the beginning of October. The stock formed a bullish harami. Looked great at the time. We didn't get confirmation on the following day. The stock continued to move lower, retesting the lows once again. A few days later, it formed another bullish harami pattern. The only difference is this one confirmed. Stock gapped open, continued to move higher throughout the day, giving us confirmation, giving us an opportunity to take the trade. What do we see here at the reversal? We see another bearish reversal signal. We've seen this one before. This is called a bearish harami. Stock fell the next day, giving us that opportunity to take gains off the table. Now, this is only looking at the last couple of months. Here's Intuit going all the way back to June of 2018. This type of stock or this type of price behavior is an investor's nightmare. Let's say you bought it sometime in the beginning of June. Well, you're barely profitable at this point. However, this is a trader's dream. To know that you can sell high and buy back low, sell high, buy back low again, time and time again. And by the way, all of these are bearish and bullish candlestick reversal signals. Earlier, I touched on the VectorVest composite over the last few months and just pointed out the most recent few swings that the VVC has gone through, and that there were bullish and bearish candlestick reversal signals at those swings. I've taken the VVC all the way back to January of 2018. And again, not a very comfortable market for the average investor. But traders look to take advantage of these turning points. And the actual high, which was on January 26th, there was a bearish candlestick reversal signal on that day. That's called a one black crow. You could see follow through the next day, and that was all she wrote for quite a while. The market finally bottomed out here at the beginning of February. The VVC formed a bullish harami pattern. The same patterns that we've looked at on the stock level, you're applying the same analysis and the same methodology to the market level. Market ran for a little bit there, started to correct in the middle of March. That right there is a bearish engulfing pattern. That's a bullish harami. That's a gravestone doji. This is actually two patterns in one. The filled red bar there with the long lower tail, that's a hammer. By the way, look at where these patterns are forming here. Right at the same level, right? So you have some bullish patterns forming right at support. Very, very strong signals here. So the hammer is a reversal pattern in and of itself. It's a one bar pattern. But the following day, not only did that hammer confirm, but it also formed a bullish engulfing pattern. You could see the market took off from there, eventually stalled out in June, and that is another bearish engulfing pattern. So you're probably asking yourself, well, how can I get started trading these myself? Steve Chappell and I delivered a course back at the beginning of this year called Master the Art of Candlestick Analysis. We delivered it live from our training center, and we are now offering it to you on demand. The types of patterns that we teach you in this course are dojis, hammer and hanging man patterns. Those are one bar formations. Then we get into the two bar formations, engulfing patterns, harami patterns, piercing patterns, cloud patterns, soldiers and crows as well. So each bullish pattern has a sister or cousin pattern, if you will. We go through the candlestick folder in the Unisearch tool, and we teach you when and how to run these searches. We always look at the market first. Then we apply the same analysis to the stock level. And what we've done is we've paired each of these candlestick formations with a very effective technical analysis indicator that complements the patterns very well. And folks, we're doing something that we've never done before. We're pairing the Master the Art of Candlestick Analysis on-demand course with another course that we have called Swing Trading Success with VectorVest. VectorVest has teamed up with Dr. David Paul, a world-renowned trader from London. He made the trip from the UK to teach you how to put together a swing trading plan that meets your personal goals and financial objectives. And we're offering this, folks, for the first time. So you can go to www.vectorvest.com/combo to sign up for both Master the Art of Candlestick Analysis on demand and the Swing Trading Success with VectorVest on demand as well. You can purchase them a la carte, as you can see. There is still time left. Registration will close on Monday, November 26th at 10 a.m. And that vectorvest.com/combo site will take you here where you can register for either the combo, which you can see is the best value, or the other courses individually. As an added bonus, we're offering 2 live mastery support sessions for the Candlestick course on December 5th and 6th, and those sessions will begin at 2 p.m. We're also offering a live mastery support session for the swing trading course on December 4th, and this session will begin at 12 p.m. Eastern Time. And I really look forward to delivering all of those mastery sessions and help you folks basically digest what you've learned during those on-demand courses. Don't forget, if you have any questions, you can give us a call at 888-658-7638. Have a great day, everybody. I look forward to working with you.